Hey everybody, Economic Ninja here. I hope you're doing great. The light's a little off. Sorry, the sunrise is coming up. Beautiful day. I want to talk to you about the CPI and what's going on tomorrow. I do have a prediction, and hey, let's see if the Ninja's right. Ninja isn't right all the time. Let's just put that out there, because why? I'm not a financial advisor. I'm not a financial professional. Don't take any of this as financial advice. I'm just a dude with a brohawk and a dream. Point being is this. The CPI numbers are coming out tomorrow, and there's some pretty deceiving information. I think there might be a sleight of hand, but we're going to give you a scenario which way it could go either way, and that's what good investors do. Because during times like this of uncertainty, and trust me, well, there is one certainty. The dollar is crashing in value, even though it's melting up. It's because the markets are melting down, and the dollar is losing its world reserve currency. And there is nothing more important than being solid, because you have all of the information you need. Solid like a... What's that saying? Solid like a... Solid, I don't remember. Just put it in the comment section, but you know what? It's time for a little bit of coffee. Oh, that's good coffee. Yeah, finish that phrase for me if you can after that. Solid like a something. All right, let's talk about this. So there's a story I'm going to link below. It's out of Forbes, and it's entitled, Inflation May Fall Slower Than Expected. Oh, how it's happening. Oh, and by the way, I mispronounced the president's name yesterday. It's Jeff Borgen. Borgen. I can't forget. I just keep mispronouncing that name. Jeff Borgen. So here we go. This is out of Forbes. And because the president, I think today, is going to put out some amazing speech on inflation and what he's going to do to stamp it down. All right, here we go. It says the rapid rise in inflation is causing the Federal Reserve to aggressively raise interest rates along with deleveraging its $8.9 trillion balance sheet. Guys, when that happens, that is going to be catastrophic. You see, they want to deleverage and sell those crappy assets, just to call a spade, in a strong market. But this is not a strong market. So if you add more selling to already a lot of other selling, it gets really ugly. So they're in a bad position right now. It says this has thrown stocks into correction territory or bear markets. Two of the major reasons for the increase in inflation have been the upsurge in demand coming out of the pandemic and supply chain issues. That is one thing, but let's just say the only reason there's so much demand is because there's so much money out there in the system. If they didn't have the money to spend, they wouldn't spend the money. Let's just be real simple here. All right, it says April CPI estimates will be announced Wednesday before the stock market open. Expectations are for all items rate to drop from 8.5% to 8.1%. So they're expecting inflation to drop this month. So how does it feel for you? Has inflation dropped? Is it getting cheaper to buy things at the store? Is your services going down, right? Are those things going? Nope, none of that stuff's going down, right? All right, how's gas going? How's that treating you right now? How's diesel prices? All right. So I'm gonna drop this what I think to be complete phony baloney story in the description box, and now we're gonna talk about it. I believe that you are gonna see actually inflation hit 9%. I know that sounds crazy. Go from 8.5 to 9, that will be impressive, but I actually think that's what's going to happen. Why? Because the wholesale numbers came out last month, and they were, I believe, they were over 10%. I want to say it was 11% inflation rate, and that usually is a omen or a precursor to what's happening in the future, right? Because as producers have to has their prices increase, so do they pass that on to consumers. Now, there can be a sleight of hand, and all of a sudden CPI's measured something different. Something gets changed, because the way they deal with the CPI is they can change it, right? Meat, let's say, 1 month can be considered beef prices. The next month it could be chicken. It sounds crazy, but they do change that. And every once in a while they do pull something out of the CPI, okay? I know that energy is not considered a standard metric in the CPI. They mess around with it, all right? And you guys all know that your electricity and natural gas costs have been going through the roof, all right? But I really do believe that you're going to see a large number, okay? We also saw this just recently with the GDP numbers, where we were supposed to have a positive number, GDP, and then all of a sudden the street was surprised by a negative number. And I believe that is going to be the case for the CPI. Now, you notice that today, El Presidente, Jeff Borgen, is coming out and going to be doing a speech on inflation, and he's gonna get right on inflation, just like Jerome Powell is. Jerome Powell comes out on a Monday the 1st and goes, I'm gonna really get on inflation. Next month we're gonna raise the rate. So why not just raise them today? Well, no, why do it today when I can do it next month? It's because they know the market's collapsing. And you guys know that a tall tale sign a telltale sign, I don't even know how to say it, is when everything's collapsing, your Fed governors and your Fed president is coming out like on a monthly or weekly basis, assuring everyone that everything's okay. When they say, hey, don't worry, there's nothing going on here, everything's good, it's actually really, really bad, okay? And so you have the president coming out today giving a speech on inflation, and then you've got the CPI numbers coming out tomorrow. I believe it's going to be bad, and I believe that's why they're putting this out there. That's why they're positioning key people in the world in leadership. Yeah, see how I did that? Yeah, leadership. It's cool. Geez, oh. Got a bug in my throat. Borgen. Hey, guys, put in the comment section if you made it this far where that came from. My point being is that things are getting bad and they're going to get worse. Now, how can I say that with a smile? Well, it's because, and it's going to come in a very interesting time. You know, I've hedged myself. I've got cash stored up, which doesn't do too well unless there's a fire sale right now. But then I have things like precious metals, gold and silver, right? Even though it looks like right now gold is going down or silver's going down and Bitcoin's going down. I have that too. What's happening is you have your melt up phase of the dollar. You see, as everything crashes and collapses, there's all these margin calls on the stock market. So traders have to go and sell their good performing assets to raise cash to go and pay off their margin debt. That's a bad thing. That's why the dollar is going up in value. There's no value in the dollar. It's because people are having to raise dollars to pay off their margin debt. This is absolutely crazy. And also, I want to share something with you. I've talked for a year and a half about market cycles. And I've said that you have normal market cycles run between 7 and 10 years. But a large cycle goes 50 and 100-year cycles. And I just saw an article come out the other day, and I'll do a video about it a little bit later today, that we have a rare occurrence happening right now where we have the bond market collapsing or puking as the stock market is also puking right now. All right. And just so you know, I don't think this is going to be long lived. I think we got another week or two of selling. Fed's going to do an about face, and then we're going to have a melt up. That's the scary time, but that's like the last 3 to 4, maybe 6 months that we've got to get ready. And it's going to be the hardest thing for you to get ready in those times. But I'll do special videos about that. And so that article said that this has not happened in at least 50 years, where the bond market is corrected at the same time as stock market. You know, in 2001, when the dot-com crash happened, I knew about it beforehand. I sold all of my tech stocks. I did get wrecked on a couple of them, I'll admit. But, and I got to make a video about that, the psychology of that situation. But, you know, what happened is as it was puking, everybody's moving to bonds. And I moved my retirement fund from stocks into bonds. And I did very well because that's what everyone does normally. And stocks correct, you go into the bonds. If bonds are correcting, you go into stocks. But right now, everything's crashing. And that's why the dollar is going up. Everyone's raising cash because of fear and because they're screwed. Because honestly, they owe money to the bank because they borrowed against their stuff with margin. Right now, margin debt is like it. Well, I don't know about today, but a couple months ago, it was at all-time highs. All-time highs. Same with student loan debt and auto debt and credit card debt. Think about where this is going, guys. It's a big deal. All right, I hope you guys got something out of this. Hashtag it right. Sorry, I screwed it up the other day. Jeff Borgen. Borgen. I'm not even going to try and spell it right now. I'll put it in the video. We're going to try and get this going. Flurgen. Man, it's amazing what's going on right now. All right, guys, just remember, be cool, stay prepared, not scared, and be solid like, I don't remember. The Economic Ninja is out.